How does the great state of New Hampshire tax retirees? We know it's tax-free from an income perspective and from a sales tax perspective, but what other kind of taxes and tidbits do you need to know before you retire to the great state of New Hampshire? Let's find out. We'll dive right into that today. Welcome again to the Heritage Wealth Planning YouTube channel, my friends, the place where you come to find out how your state, in New Hampshire in this case, taxes its retirees and all kinds of other stuff when it comes to financial planning, ways to minimize your expenses, ways to increase your income, ways to reduce your taxes. We talk about it all here at the Heritage Wealth Planning YouTube channel. So let's dive right into the great state of New Hampshire, the Granite State, which I am familiar of in some degree, being from Maine and whatnot. So as we see with Kiplingers, the dark green signifies good results. That's for sure. That means it's taxed one of the top 10 in terms of tax friendliness in the union. Kiplinger says it's most tax friendly. Residents of the Granite State pay no taxes on Social Security benefits, pensions, or distributions from the retirement plans. No sales tax either, so you can shop until your heart's content. Though New Hampshire imposes a 5% tax on dividend interest, a $1,200 exemption is available for residents 65 and older. So again, for retirees, more of a reason to be tax friendly there. It also depends more on property taxes for revenue than most states. That's 100% right. The median property tax in New Hampshire is $5,100, which is the third highest in the nation. But some relief is available to those 65 and older, so that's good. It has no sales tax. It doesn't have an income tax, but it does tax dividends and interest in excess of $4,800 for joint filers. So that's still pretty good. I mean, to get $4,800 of dividends and interest, let's just say you're only getting 2% divided by 0.02. You need to have $240,000 in an account that's paying 2% to get $4,800 before you have $4,800 of dividends or interest. And again, that would not be included in an IRA because IRAs don't pay dividends and interest. They pay 100% ordinary income, which means it's not taxed at all. Dividend and interest is just a principle that shields out a dividend or an interest and doesn't say capital gain, a dividend or interest. So if everything you have is an IRA or 401k, this is not applicable to you. It's only like your bank CDs or if you have a brokerage account with a lot of GE stock and it pays the dividends. Retirement income is not taxed, just like we talked about. And we talked about the $1,200 exemption available for residents 65 and older for taxable dividends and interest. That doesn't make sense. Okay, so 5% tax. Okay, so here's not saying here $4,800 plus the $1,200. So basically, if you're over 65, you're married filing jointly. It looks to me like you get $6,000, maybe even $7,200. Before you pay anything on dividends and interest. That's pretty good. IRAs, we talk about nothing's taxed. There's no income tax. Property tax is where they get you. Wow, the median property tax in New Hampshire is $5,100 on a property value, median property value of $236,000. So basically that's 2%. Let's see about the homestead exemption. An elderly exemption for property taxes. I would call it, they call it elderly exemption, maybe not a homestead exemption. Same thing. There's an exemption. To those aged 65 and older who have lived in New Hampshire for at least 5 years, towns and cities set additional eligibility rules, but minimum exemptions $5,000 off the assessed home value. Property tax can be deferred, but accrued interest at 5% a year. I hate that deferral property tax thing. The deferred property tax may not exceed 85% of the equity in your home. The deferral is available if it's granted by the assessing officials to any resident property owner who is at least 65 years old. So all I was saying is you can kick the tax can down the road. It can't be more than 85% of your equity that you have in your home. And just remember what equity is. You have a $100,000 house. You owe $50,000 on it. That's your mortgage. Your equity is $50,000. That's what that means. So you couldn't have more than 85% of that $50,000 outstanding to the state for property tax. And that would be what 85 is. That's 33,000 or something like that. 5 times 0.85, 42,500. Excuse me. It could be more than the 42,500 that you owe to the state of New Hampshire, and you're still paying 5% a year. To be eligible for the low and moderate income homeowners, let's see, property tax relief program, you must own a home subject to state education property tax, reside in the home as of April 1st of the year for which the claim relief, and have a total household income of $40,000 if you're married or $20,000 if you're single. So in New Hampshire, that's going to be tough. No sales tax is due, but vehicle registration is done at the town and county level, where taxes may be levied based on the vehicle's age and value. No inheritance or estate tax. All right, good. So that's all pretty good, other than the property taxes. But bad trade-off for no sales or no income tax. And just as a thought here, I guess a reminiscent, I just remember when we used to drive, we'd go to see the Red Sox or whatever, we'd go to Boston. Remember, I lived in Maine, so you got to go through New Hampshire to get to Boston. On the way back, my folks would always stop at that Portsmouth Kittery exchange there. So there's a bridge from Portsmouth going over to Kittery, and Kittery's in Maine. Portsmouth is New Hampshire. Would always stop at the ABC liquor store there, so my folks would get their beer and cigarettes for free without any sales tax. It wasn't for free, but there was no sales tax. I remember it was like put in my head about how sales tax or any kind of tax can drive the way people respond. So the facts are, we did not drive into Maine. We stopped in New Hampshire because they didn't want to pay the sales tax on those goods. It does drive behavior. Tax policy drives behavior, and anyone who says it doesn't, you have to argue against that example right there. Okay, we talk about the taxes here. State and local tax burden 7.9 when you factor in the sales, property, and all that. So 44 is ranked 44, which is low. We want it to be low for sure. Tax freedom day is April 22nd, which is pretty low actually. We want to be high. That's one time we want to be high in the tax foundation. That's just because of property tax. Sales tax, we talk about, there's nothing. They do charge 20, that's not bad, 23 cents on the gas tax and 1.78 on the cigarette tax. Gas tax is pretty favorable, so that's good. I don't smoke, so I can't say it doesn't worry me, but for me personally, that's not an issue. But I'm sure there's some people in New Hampshire that do smoke and that get hammered by the cigarette tax. Property tax is 2%, yeah, and it's ranked the third highest in the nation. And in terms of the actual dollar you spend, it's ranked number 2. So New Hampshire it hits you pretty hard on property tax for sure. But at the end of the day, if you're paying $3,000 in property tax, nothing in sales tax, nothing in income tax, I'll take that any day of the week. Let's just go back to Smart Asset in Nevada. So we're going to go to New Hampshire here, and because smartasset.com centers around income tax, this would be pretty easy to figure out because there is no income tax in New Hampshire. So at the end of the day, not much to see here, but let's just get out of this real quick and go back to the great state of New Hampshire. And I'm sure that's in the first threshold here. Hold on just a second, my friends. Hold on just okay. So they're in the second of the 4 quartiles. So they're doing by quartile. Well, I don't know if by quartile. Now there's no income tax, but let's just see what Smart Asset has to say about other things here. I do want to see what they say about property taxes exactly right here. How high are property taxes? Very high. Typical homeowner in New Hampshire pays more than $5,000 annually in property taxes. This is more than twice the national average. One reason property taxes are so high is that the state collects a statewide property tax in addition to the local taxes that the cities, counties, and school districts pay or collect. The average property tax rate in New Hampshire is 2.19%, which is significantly high. That means a senior who owns a home can expect to pay about $2,100 on every $100,000 home value. And again, there's not much of an exemption whatsoever. So New Hampshire does not have a sales tax, but does have a number of sin taxes, cigarette tax we talked about, beer tax at 30 cents a gallon. Alcohol sales also provide significant revenue to the state because you can only purchase liquor in a New Hampshire state-run store. So by and large, it's tough to beat New Hampshire other than the high cost of living. If you have a good pension or a good retirement account, New Hampshire is a great place. As beautiful as all can be. I think they do show some pictures here. It's a wonderful state. You got the mountains, the White Mountains. New Hampshire is just a wonderful place. A little bit too cold for me, but by and large, New Hampshire is a great state to retire. Very tax friendly. The cost of living is not cheap for sure, but highly recommend New Hampshire. So if you like the stuff we talk about here at Heritage Wealth Planning YouTube channel, give me a thumbs up. Don't forget to subscribe down below, my friends. Subscriptions always help. And if you do subscribe, hit that little, I think it's on this side actually. There's a little red button right there that says subscribe. Very inconspicuous, but if you see it right there, it'll say subscribe. Hit subscribe. Then there's a little bell right down there that says notify me of future content. So click on that. And then, of course, thumbs up, always helpful. And don't forget to go to the blog, heritagewealthplanning.com. We'll see you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.